Hi everyone, welcome to another honeystocks.com weekend analysis, and this one's going to be going out on the 9th of October 2021. Now, I'm actually recording this on Friday night. The market has just closed and I've had an overwhelming number of social media messages, emails, etc. over the last couple of weeks because of some of the charts that I've been putting out to social media and to Twitter. And I wanted to kind of walk through some of those charts, what to show you what I'm seeing in the market, why I think there's a case to be made that the Nasdaq has bottomed. As always, I don't use the magical hindsight indicator. It's all data driven, the charts don't lie to me, so hopefully you get some value from this, and if you do, feel free to give the video a thumbs up, subscribe. I try to upload at least once a month, and like I said, hopefully you get some value from it. So let's dive into the charts, let's see what the market's telling us, and yeah, let's go. Now, before I get into the charts, as always, please pause the video, make sure you're comfortable with that. Do your own due diligence, don't be silly, never act blindly. Completely do your own due diligence. I think that's the key message here. Maybe to give myself a little bit of credibility, I'm working my way towards my CMT. Market technician, technical analysis is something that I'm widely known for in professional circles. And again, hopefully you get some value from this. And if you do, as I said before, please do subscribe. Now, what I want to do is just spend 5 minutes walking you through the broader market, making the case that I want to make for, I guess, a rebound in some of the major averages and technology, etc. But I always like to look at seasonality, and we're obviously coming into the fourth quarter. We are in the fourth quarter, I should say, and you know, despite what the headlines would tell you, we've actually started off October. Over the last week, it's actually been pretty positive. Obviously, I'm sure we all know September is generally September. It's not a great month. I can't remember the last September I enjoyed. But October, there seems to be a little bit of constructive support. So I'm bullish going into the fourth quarter, which I guess goes against you know, what you'll see on financial media, the mainstream financial media and so forth. But as always, I default to the charts and the data. Now, my work has got a lot of attention this week because of some of the charts that I've been putting out. Now, I made a bullish call on Nasdaq as it came out on Tuesday. The Nasdaq Composite, which is the whole Nasdaq, found support at a very logical level of support. Now, I've been watching this level with a lot of interest and just looking for a bit of a bounce, and that's exactly what we've had. Now, obviously, that is translated into some moves in some of the individual names. We can look at the Nasdaq 100, which essentially did the same thing. Now, bounced off a very key support level. Now, there's no fancy technical analysis tools that I'm using. It's just bog standard support and resistance. There's nothing out the ordinary with it. But what I do like to do when we are reaching these support levels, I'm also looking at RSI to see where in the past we found a bit of an oversold bounce. And it's no surprise to me that once we hit this level in RSI, again, coupled with the technical support in price, we got a bit of a rebound. We can look at the Russell 1000 growth ETF, exactly the same. It found support exactly where you would hope to find support. Now, the big question is, will the market follow through in this, or are the doom mongers and the fear mongers out there going to scare you out your positions? Now, one of the charts that I give a lot of weighting to is this one. Now, this is the consumer discretionary chart relative to consumer staples. Now, the long and short of it is, if consumer discretionary is outperforming staples, which is a traditional defensive area of the market, generally tells us that we're in a risk-on environment. Now, of course, I'm watching this level with a lot of interest. If we resolve higher in this ratio, that's as risk on as it gets in my book. In my technical world, this is a very bullish chart if this breaks out. So when you weigh up all the weight of the evidence and you look at the support levels in the NASDAQ, again, I'll get into the S&P in a second, but it would lend itself to, I guess, an environment where we want to kind of be buying stocks, which I guess for many of you that have been burned in September, and yes, I have been burned on a couple of positions as well. I think there's a case to be made that we're starting to enter a bit of a bottom and back to a risk-on environment. Now, the 10-year Treasury note yield is getting a lot of airtime at the moment. Now, everybody and their dog is telling me that it's bearish for technology. I'm not quite in that camp. But what I do know is that it's good for banks, regional banks, obviously XLF. It's no surprise to me to see this breaking out and financials close to breaking out as well. So when I'm looking at the market, I'm looking for outperformance. I'm looking for the easiest path to victory. And I think at the moment, it's not necessarily in technology, and I guess there's many of you that will be watching this that are fixated on technology only. I do have some charts for individual names. I want to show you that some of these boring old industrial, financial, energy names can rip 30% in a week just as well as the growth tech names. So I think financials are basically setting up. Now this is the scariest chart that I have. This is the weekly chart of the S&P 500 index. Of course, I've got my eye on this for a potential failed breakout. I'm not giving a lot of weighting to this chart at the moment because if we default to the daily chart, yes, we're under the 50-day simple moving average, but I would have bigger concerns if the daily chart starts to break below these support levels. At the moment, it's obviously not been a great September. Some stocks, I should say, have done remarkably well in September. But by and large, I think we're bouncing off the bottom in a lot of these areas. And I'm looking to take buy positions. The Dow, again, very, very similar. We're looking for a breakout above the 50-day simple moving average. But again, I'm always aware of where the blind spots are and where defensive action is absolutely required. If the major averages start to fall off a cliff, then of course that's a problem. And if we break below things like 200-day simple moving averages, then that's generally a big problem. Going into the fourth quarter, I think with the Russell 2000, the small caps, where I guess those of you that like to be risk on and take that the elevated risk for the bigger returns. I think if we can get a breakout in the small caps going in over the next month, if the market does rally hard, small caps I'm noting at the moment are outperforming a little bit, but I think a breakout above this level, and I think it's risk on for the small caps. Now, many of you have asked me why I have been covering so relentlessly the cryptocurrency space, I guess on social media over the last month. Again, very, very similar to the seasonality. This is Bitcoin going into the fourth quarter. As we can see, massive performance generally going in. When we look at the individual charts, for me, they look like they're breaking out, in my opinion. I think Bitcoin is a Fibonacci chart. I think by year end, I think 70,000 is a very comfortable target to aim for with an outside chance of 112k. So I'm very, very bullish on Bitcoin. I'm also very, very bullish on Ethereum. Again, I think there's a cup and handle pattern developing. I'm also watching this one with a lot of interest here. This is Ethereum relative to Bitcoin. So if this ratio breaks out, it tells me that Ethereum is outperforming Bitcoin. So, if you're somebody that's in the camp that maybe wants to buy one or the other, if this ratio resolves higher, you probably want to be looking at Ethereum at that point. Now that leads me on to, of course, the individual stocks, the individual areas of the market that I think are looking pretty decent at the moment. Again, as always, please do your own due diligence. But I think crude oil is breaking out. Now, what does crude oil mean? If it's breaking out, well, it means that you can go and have a look at the boring old energy names. Now, technology is obviously the area that I think most want charts on. So I think AMD, I think there's a case to be made that we're breaking out of a triangle pattern. I'm noting that throughout all the chop, the $100 round number held firm, and of course that was a previous breakout level as well. So it's very interesting to me that this level held as support. For disclosure, I have bought AMD, and I think it can go much higher. I've got a target here of around 130. Apple, again, another disclosure, I'm sure most of us own Apple at this point. It's obviously over the last 12 months you've had to go through some pretty big drawdowns, but what I do note with the chart with Apple is when we get these pullbacks, it does pull back to logical areas before rebounding. I've got here the 100 SMA and the 200 SMA, both look to be decent buy points. So for those of you that like to buy the dip, I think there's a case to be made there that Apple is potentially looking to rebound at those levels. Now going back to the boring old oil and gas names, this is a chart that was provided to our clients and members a few weeks ago, and of course it broke out and it's done its thing. But these are the types of numbers that these names can do. Now I understand that many of you won't have access to the scanning parameters that I have, the thousands of charts that I look through every single week, but these are the names that are doing well at the moment. Now I would never advocate buying these stocks when RSI is as high as it is, so what I would suggest is, building in support levels and looking for these pullback opportunities when they do pull back, because when stocks like this start to trend, they don't trend for 30%, they oftentimes go 50, 100, 200% moves. So I think there's a pullback opportunity there with Continental Resources. I think Bank of America looks to be a bit of a no-brainer at the moment. It's probably quite attractive from a valuation standpoint there. Antero Resources, again, another one of these boring names. I've been covering this for the last 12 months, both on social media. This is the original chart that was sent out to our members last year when it was at $5 at this breakout point here. Trending, base, breakout, base, breakout. This is all textbook technical analysis. I've covered this one a couple of times recently on this failed breakdown and this breakout, and it's trending beautifully. Obviously, I'm sure most of you have heard about the gas shortages, and certainly over in the UK, it's quite a big deal at the moment. Airbnb, covered this one on the breakout for social media a couple of months ago. It's been trending beautifully, pulled back. I covered this one actually in our halftime analysis for our members on Wednesday, and it pulled back again to a logical level and has rebounded beautifully. So I think the trend is still intact with Airbnb, and of course international travel is starting to open up again. So again, I think it's probably a bullish environment. I think the stars are maybe starting to align now for Airbnb a little bit. Now this chart, so many messages on this one, just through social media, email. For those of you that don't follow me on Twitter, I posted this chart to Twitter. This is the chart here that I posted, just highlighting that I'd like to see a bear trap followed by a rip higher. Now, I did not expect this type of move. It's gone parabolic now. What I want to show, I guess, in this analysis is why the failed breakdown is such a powerful setup. Now, what you tend to find is when you get these breakdowns, a lot of people try to short the stock. And when you're talking about a good company like Take-Two Interactive, what you tend to find is you get these bear traps, and as soon as the bear trap goes in, the shorts are forced to cover, and that's what you get. You get a massive rip higher. For disclosure, I did not expect this, but just to cover, because I've had so many questions on it, it's broke out again. I don't know how far it can go. It's going parabolic. You just need to hold on and profit as much as you can from it. I can't give any guidance once a stock starts to get move like this. For me, I like boring uptrends that I can just manage with my management tools. But yeah, I can't add anything more to this one, unfortunately. But what I can do is highlight some stocks that I think are potential for bear traps. So I've got a couple of them here that I want to run through. Lam Research, I'm sure most of us know about the company. I think if it moves back up above 565, I think there's a potential for something similar with Take-Two Interactive. We can see here with Snowflake what happened. We had a failed breakdown. Again, I covered this one months ago for our clients and members. It met our target, and it's close to breaking out again above 325. ARC, I posted this one to Twitter today as well, looking for a failed breakdown. Now, obviously Cathie Wood is under or coming under a lot of scrutiny at the moment. Record outflows from our ETF. But again, I'm not ready to write her off yet. Of course, the bears are in control if price is below 115, but we know if it can get above 115, those shorts will need to cover, and we know what happens. So I think the ARC ETF, the Innovation ETF, is definitely worth adding to the watch list. Of course, I wouldn't buy it. It needs to be above 115 for it to be interesting to me. Another chart that I guess has got a lot of attention in the last 24 hours, my final checklist box has been hit for China Tech. Now, I understand that there's many of you watching this that will never touch China again, and I totally understand. I get it. I'm in that camp as well. I 1000% will not buy Chinese equities. Way too much risk and volatility. That said, my clients obviously want to know what the charts look like. This is one of the charts that I've sent over to them, and I think there's a case to be made that we're now putting in a bottom for Chinese tech. We've got a bullish divergence. We've put in a higher low, and we've now cleared the 50-day simple moving average, which has been acting as resistance throughout this whole downtrend. We've got accumulation, above average volume coming in. So I think the case is there to be made that there's a potential bottom there with Chinese internet ETF, KWeb. CDNS, again, textbook support and resistance. I think you just remain bullish provided it's above that 150 level. Salesforce. Now, what I want to highlight with this, our target was actually met on Salesforce a few weeks ago. Put in a successful retest from this breakout level, but please note this is a monster 12-month base. Now, I'm sure most of you have heard the saying, the bigger the base, the higher in space. If Salesforce breaks out of this 12-month base, things could get very, very interesting. I suspect earnings will be a catalyst in either direction, but either way, if this gets above 285, I think it definitely is worth adding to the watch list. Datadog, the trend just continues. Absolute monster throughout this whole trend. It's never closed below these key levels. The trend is still intact with Datadog. Facebook, again, going back to the Apple chart, I'm looking for these opportunities when we approach these key levels. Now, this is the 200-day simple moving average, which we can see act as support quite a lot of the time. Obviously, Facebook broke out, went on a nice trend. It started to break down, But again, as long as it's holding above this 200-day simple moving average, I think it's probably opportunity. Obviously, there's a lot of negative headlines that go with Facebook at the moment. That's just something that you have to accept when you're buying into fear or buying into declines, whatever you want to call it. But I think above the 200-day simple moving average, I think there's a case to be made. Google, on the other hand, Google has met our upside objective. Now, this is a Fibonacci chart for me. I think the chart can demonstrate that these levels are highly significant. Now, can it break out if technology catches a bid over the coming weeks? Of course it can. But for me, it's interesting above 2,900 or a significant pullback. Home Depot, again, looks like it's basing. Again, we're looking for a breakout here. I think a breakout above 350 would make a lot of sense. INMD, pullback, incredible trend. Now, I've got quite a few members that are in this already. We've got the 50 SMA and the 100 SMA. So when we get these pullbacks to these logical levels, it tends to be a decent buy point. And it is pulling back at the moment to its 50-day simple moving average. MGNI noted it didn't break down through the whole month of September, held firm, and I think that there's a logical target there of $38. Moderna, I get a lot of questions on Moderna. Now, the problem that you have with I guess with the biotech names that are obviously, there's headline risk. I think when we look at the Pfizers of the world, the Modernas, etc., there's just always going to be that headline risk because of the whole COVID situation. Now, I covered this back in June. It broke out, hit our target at $500, significant now number. Now, again, I don't use the magical hindsight indicator. I posted these to social media at the time, highlighting these RSI levels. And of course, it has declined since then. I think for a buy opportunity, I've built in what looks to be a pretty significant trend line. So if it pulls back to the trend line, I think that could potentially be a buy opportunity there for Moderna. Cloudflare is broken out. Again, it's been on a monster tear. I covered this one for our members on this breakout here. Posted this chart in our halftime during the week, and of course it's rebounded and did very, very well. But Cloudflare, great stock, pulled back. Looks like it's wanting to move a little bit higher. Nvidia, pull back to its 100-day simple moving average. Pullbacks and uptrends offer opportunity. So I think with something like Nvidia, I think that there's obviously the whole semiconductor scarcity, and there's issues there with production and so forth. The trend is higher. I don't know what else to say. It's obviously a bit of a choppy chart, and that just, I guess, comes down to what we've seen in September. But I think with Nvidia, great company, pullbacks offer opportunity on great companies. So as long as it's above that $200 level, I'll remain bullish on it. Thermo Fisher, I covered this one for social media a couple of months ago. It broke out, went on a trend again. Looking for these pullback opportunities to key support levels, because when you get the support levels come in, it tells us that the trend is still intact, and again, it's oftentimes a great buy opportunity. Unity Software, a lot of hype around this company. Had a breakout, pulled back to its 200-day simple moving average. Again, it's had another pullback over the last few weeks, like the whole market has. But again, I've got a very logical upside objective there of around 175. Zscaler pulled back to its 50-day simple moving average. Again, it only closed below it a couple of days, and it's rallied. So if my thesis on technology bottoming holds true, then you would expect Zscaler, Cloudflare, Unity, etc. to move higher as well. So for me, it's going to be very, very interesting to see what happens next week. One of the banks is breaking out, Zion's Bank Corporation, quite an attractive PE ratio on a breakout, looks pretty decent to me. Roku is putting in a bullish divergence. Now, I was actually hoping for this to pull back to around the 275 level. That ultimately hasn't happened. It could still do it, but there is signs there that Roku is potentially putting in a bottom. But again, I suspect there's probably going to be some nonsense with this one when it comes to earnings. This is one of those names that can gap up or down 20%, so something to absolutely be aware of. Digital Turbine, this is a trade alert that was sent out to our members. It's broke out, hit target number 1, and we're looking for a further breakout there for a compound opportunity if it can break out above that $81 level. Boeing, obviously the airlines, etc., looking for a breakout. I think there's a case to be made there. Obviously, again, with international travel starting to open up again, Boeing might fit the bill. And Valero Energy, this is a chart that was sent out to our clients last week, broke out. We're just looking for a potential retest pullback opportunity. So for those of you that are looking for exposure to energy, again, you're looking for perhaps attractive PE ratios, valid retest to the 200-day simple moving average, and of course there's quite a logical upside objective there that's obviously quite attractive. So I hope you've got some value from that. If you are somebody that maybe struggles a little bit, or charting isn't necessarily your thing, or maybe you're looking to learn charting or get better at charting, feel free to stick around for a minute. But if you have got some value from that, please do subscribe to our channel, give it a thumbs up. It's the least you can do. If you've stuck around this long, please give the video a like. It lets me know to do it next month and to continue providing the content. It'd be much appreciated. Let me know what stocks are on your radar, and I'll do my best to get back to as many messages as I can. But if you are somebody that likes charting, feel free to go and check out my website at honeystocks.com. We provide technical analysis, chart and research. So we provide every single week premium analysis to our members and clients. We provide our halftime analysis every single Wednesday. We've got our trade ideas. I'll show you what that looks like in a second. We also provide full access to our investment trading community, provide charting support on a daily basis. If you're somebody that perhaps struggles with charting, would like a second opinion and so forth, I'm on hand day in, day out to provide my charts as and when required. But I think if you're somebody that is new to technical analysis, investing, etc., I'm told that what I've built out is incredibly good. It's a technical analysis program. Don't charge anything for it. It's included with all our memberships. So if you are somebody that would like to learn technical analysis and to chart as I do it, you'll have full access to that as well. And feel free to go and check out how I got ahead of the 2020 crash. Again, I don't use any magical hindsight indicators. That's the analysis that was provided to our clients and members on the 22nd of February. Everything's called in real time. And again, if you're looking to learn, there's an incredible amount of learning to be had from that one. And I've only just recently uploaded it to social media because I recognise the value that it can have for those of you that are maybe looking to learn. So feel free to go and check that out. But to show you what our work looks like, this is a recent alert that went out for Cloudflare. Obviously, massive moves from its breakout 85. Zim Shipping Services, I guess many of you probably aren't aware, but shipping costs have gone through the roof. So this is one of the names that I put out to our clients and members a couple of months ago. Square Inc. hit our upside objective Zscaler, absolute monster. Antero Resources, I touched on that one earlier when I covered the breakout at $5, and obviously subsequent alerts have gone out for it. Plug Power was an absolute monster, 400% last year. So again, feel free to go and check it out, because I'm very, very unique in what I do. Every single alert that I've ever sent out to our clients and members is logged on our website for complete and open transparency. So you can see the date that the trade alert went out. You can see the price and how the stocks have then gone on to do. But of course, I can't convey, the results better than what my members can. So again, don't take my word for it. This is one of our members this week sending me an email, just giving me his gratitude and saying he looks forward to being a member for many more years. That's one of our premium annual members. Again, this is Nick. Be a member for life. Rocco, again, count me in. Guidance has made my year, not just because of the returns, but also the education and the community as well. It's very intelligent community that I have. It's not a community full of day traders that are just out of high school or anything like that. It's very professional, very smart folks, and again, it's why I have an annual membership. And again, feel free to go and check it out. But again, trading account up over 100% for the year, for the second year in a row. That's Vince. Got options traders, 25,000 profit from 45 contracts. Equity curve, massively outperforming the market from another one of our members. He's just given me his thanks. Trading portfolio, big, extreme anxiety. I don't know what else to say. And there's another one breaking 100,000 up at 160. So again, go and do your own due diligence on our website. But I think the important thing to say is my work is not for anybody that's day trading or buying short-term weekly expiration options. I think if you've got a mid-term approach and you're looking at things, weeks to months out, if you're maybe looking to get away from day trading, if you're maybe looking to learn technical analysis, maybe you're just someone that's too busy, you've got work, life, family, career, you don't have the time to kind of, get into the market as much as you would like. So that's where, individuals like me come in. Maybe you want to be part of a successful community. Maybe you're sick hunting around social media. Whatever your deal is, feel free to, again, go and check out our website and see if my work's a good fit. But if you have stuck around to the end, again, thank you very much for watching. Give the video a like, and maybe I'll be able to welcome you soon. Thank you very much.